Did you know that momentum accounts for some of the biggest profits in trading? And if you actually can ride the momentum, you can win quite big. But the important thing is actually timing. So in this video, I'm gonna explain to you how to identify, trade, and profit from momentum. Now, before I begin, I wanna let you know that in the description, you're gonna find links for the Discord, the Telegram, and also a free 2-hour course. In the private network, which I own, there's 200 hours of education. Everything is packed in one place. Daily updates, weekly outlooks, live trading, positions and trades on spot and perps as well. Also in the comments, let me know which indicator you think is best for spotting momentum. Now, what is momentum? Momentum is like a wave, right? Once it starts, it gains strength. So the goal is to catch it before it peaks. And also I want to let you know that in the free trading community, I share trade ideas. So you don't have to pay anything, you're gonna receive some alpha back. If you want to join, feel free to do so. This momentum is very simple. And you just have to identify it. That's the super simple concept, right? Momentum is price going from point A to point B without stopping. You know, this is momentum. Momentum is when there is no pullback. Momentum is going with the trend and just identifying what is the momentum, right? You have to identify also the areas on the chart where there could be momentum. In terms of identifying momentum, you have to understand that I'm gonna compare balanced to imbalanced markets, right? So in a balanced market, generally you have equal supply and demand. That's why it's called balanced, because there is a balance between the buyers and the sellers. And in an imbalanced market, there is a disbalance, and that's why you have momentum, right? So as an example, when you see increased volume paired with a breakout above resistance, that's potential momentum building up. So there is indicators which can help you with momentum, such as moving averages, RSI, MACD, volume, all these indicators that are being used to identify momentum, right? And in terms of chart patterns, there is these breakouts, trends, and also parabolic moves. But the main topic of this video is momentum. And the way I identify momentum and the way I trade momentum is simply with moving averages. So this is an example of momentum trading. It's on Pepe, that example. On the 4-hour chart, I'm using 26 EMA and 52 EMA. It's super simple, but it works extremely well. So this is an example on a 4-hour trend at the beginning of this year. And as long as you maintained the trend bands and you actually tested them once, twice, third time, fourth time, fifth time, sixth time, and then you lost it, that's when it topped out. Another example. This is Pepe again. This is on the higher term time frames. So you can see when you're below the trend bands, you have momentum to the downside. And once you flip them, down here, you flip them, test the resistance, flip it, support, you start trending to the upside, right? And you change the momentum from the downside to the upside around here. So you have pretty much a lot of time to enter. You don't have to rush, stop loss below this low and target new highs essentially. But that's the way it looks, right? Next thing is gonna be Ethereum on the 4-hour. Down here, you move into a bullish trend. You form the momentum to the upside. You test it once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10 times, and then you break it, and then you see the price drop to 3,200. So essentially, as long as you have momentum to one side, you're gonna continue moving to that part of the chart until you change the momentum. It's very simple, right? Trend is your friend. Just trade with the trend. It's super simple. Most people overlook this concept, but you have to be trading with the market. You don't have to fight what you see, right? So just go along with the program. Do what the market tells you to do. Next example. This is gonna be Ethereum USD on 1 day. You can see here, you flip the bands, you test 1, 2, 3, 4, 5 times, 6 times, 7 times, 8 times, 9 times, 10 times, and then you flip into a bearish trend and you're gonna move down. Another example, Bitcoin this summer, this on the 12-hour. So you can see here is not that clean, right? At the pretty much on this place. But this is because the price is $68,000 and it rallied previously from $32,000. From 32 to 38, this is where you first change the trend bands and then you start chopping up, right? there is not a clear direction until later on in September, where you go above the bands with a back test, go above the bands, test again, and then start moving to the upside, right? And this is your most obvious trend signal. That's why I have highlight on this low and this low, because it's very, very simple, and it's you just have to do what the chart tells you to do. Right now in this example, this is a very clear bullish continuation pattern, especially on the 12-hour time frame, which is very clear. This is the zoomed in, right? This is the zoomed in scenario where you, after the back test, you start trending to the upside, and then you test again, you test again, you test again, and you continue moving to the upside. Now, you have to be aware that also down here, not only you moved above the bands, you had other signals as well. You can clearly see this descending channel, you broke outside of it, you tested it once, you tested it twice, then you back tested at EMAs. But before this even happens, you have to be thinking about the market structure, right? So from this low, you create a high, you create a high, you create a higher low compared to this low. Here you create a higher high compared to this high. Here you create a higher low compared to this low. This low is higher than this low. This high is higher than this high. So you already have that market structure, right? So this is just putting things into not that simplified context, but just giving you more information. Next is gonna be in terms of common mistakes. So one of the biggest mistakes is entering too late, right? Once the momentum is already fading, because the risk is outweighing the reward. So you're gonna be risking too much in terms of a risk reward, and you're gonna get too small a reward for what you're risking, right? As an example, let's say on let's take this example on Ethereum, the 4-hour time frame. So let's say you entered here, right? You enter into here. Where's your stop loss? Probably below this. But in terms of a risk reward, this is like 1.5, even if you cashed out right at these highs. If you measure it, if you entered here and you have stop loss below this low, you have too small a risk to reward compared to, let's say, here. You can use one of the previous lows, let's say this one here, because you would break down from the bands. You can use, let's say, this one, you can use this low, and you still wouldn't be stopped on this move. So you have to think about what is the safest stop loss and how you can get the biggest risk to reward. I would say this is the biggest mistake when you trade this type of strategies. Also, you have to be thinking about the time frame you're trading, right? If you're trading on the 4-hour time frame or the 1-day time frame or the 12-hour time frame, don't look at the chart every 5 minutes. Nothing's gonna change. It's gonna most likely lead you to over trading or ignoring the risk management, right? So don't chase ideas. That's something very important. But yeah, that's what I would say in terms of a conclusion. Just to recap, momentum trading is all about identifying the opportunities early and just riding the trend, and once that trend is gone, you just have to exit. And mastering momentum is gonna change the way you approach markets, right? Because you're gonna be thinking about different things now. So if you have to think about, do you want to be a momentum trader, do you want to be a range trader, do you want to do both? Do you want to, it's up to you what you want to do, but there's tons of opportunities to make money in this market, and you just have to find your own niche, in my opinion. And yeah, that's what I had to say for today. I hope you liked the lesson. I keep it short and sweet for you, and take care.